Guess what day it is? Guess what day it is? Hump Day. What's up, everybody? Hump Day edition of the Daily Market Commentary. Hope you guys are having a great morning. We're going to take a look at the markets from an educational perspective, looking at breakouts, reversals, all that fun jazz, as we're seeing a bit of weakness this morning in our major markets. If you're new to the channel, click the subscribe button, hit the notification bell. Please share this with your friends. Talk to them about how we start our day and what things we look for. So let's get rolling with the S&P. So the S&P first. I will say that looking at this market yesterday, I really did feel like we had an opportunity to break out above this 45.83 and really continue to run. I thought there was not a whole lot of great supply here, and we had seen some decent momentum, and we're starting to kind of come back up. But then look at what happened. All of a sudden, we poked above this 45.83 for just a brief moment before then absolutely capitulating straight down all day yesterday. Kind of a bearish day, and then the overnight we got continuation of that move to the downside. Now, one thing I put this out on Twitter yesterday, and if you don't follow me on Twitter, go to Twitter. You can find some of the stuff. We post some things up there from time to time. But I was speaking specifically to this level right here, that a lot of people would consider this a false breakout. And the thing that I really want to highlight about there is this going to be considered a false breakout? Would this be a false breakout trade based on our rules and what we look at? Well, the answer to that is no. And why is that? Well, because did I poke above an area? Yes, absolutely I did. Poked above an area that we had identified as a potential breakout point. But what was missing? The key was that we did not get any basing heading into that level. The basing that we got in there should have occurred somewhere where this blue box is. That's kind of why I leave these blue boxes here, because what we want to see is narrow range candles, right? We want to see some narrow range candles, some small candlesticks basing just before the level to then justify that breakout. So this is where a lot of people look at false breakouts, but that's not a false breakout because it's not a breakout. It simply is price poking through and then coming off. Matter of fact, now one of the things that I would say is that our 4-hour trend, we have a clearly defined lower swing low and lower swing high. So if anything, it allows me to change my bias very, very quickly because we got lower than this low right here. So was I wrong on direction yesterday? Absolutely. And I'll take that. I'll own it. But it doesn't mean that I entered a position improperly. And frankly, there was no quality demand for price to stop dropping once we started to come down. So ultimately, throughout the day, you actually did have a couple of decent areas, probably the best one being right through here on this retest back into this wick over wick as a chance to re-enter throughout the day. Now, we have made it down to a potential area of demand, which is this drop base rally. We've come close to this already once. So this would be a confirmation long since we've already come close to it once. And if we do bounce off that level, I really, really like the pivot here because it's formed at an excellent time of the day, right there at the London Open. Really good time of the day that area is formed and created, that we could see, if we rally up here early this morning, a good reversal for price to head back down. Now, below there, as far as my next area of demand, I've got this area down here on an hourly chart, but our 4-hour trend is now shifted directions, so this would need to be a confirmation entry. Now, remember, my job is not to go out and find all the trades to get into. My job is to judge all the levels, to quantify whether or not this level makes sense for me to be able to willing to risk money on it. And so while this is a pretty good level, The fact that we're in a downtrend means that I've got to switch to a confirmation, and it lowers the probability of that level being effective. Same thing in the Nasdaq. The Nasdaq actually did have what I thought was a pretty good demand area through here. Now, this one in my mind is a just a good old fashioned stop out, because we came to the origin of a really good move, and then we just almost immediately we hit it once. Next candle here. Next candle, we got below the low of the candle heading into that area. So this is a very, very quick stop out on that position. Putting in not quite a true double top, but we did get lower than this candle's low on our 4-hour chart, giving me an opportunity to get short on a pullback. And so looking up to the same area, it would be this region right here. Now, I'm not sure if we're going to get that retest today or not, but it is setting up for a potential retest. Russell 2000, very similar picture. We did have a 15-minute demand area down here, so we would need to look for a reversal coming back up, coming into a decent demand at the moment as well. But the Russell area would be just a bit higher. So, all in all, frankly, not the best day yesterday for those of us that were following the trend. And that's kind of what happens, right? When the trend changes direction, that's how you get hurt when you follow the trend. Over time, playing the long game, and not in terms of long or short, in terms of duration, playing the long game, you're going to be better off if you know how to follow the trend. And trading the trend is going to be your better way to go as a trader. But on days like yesterday, where your trend changes direction, you will get some stop outs. So next, looking at energies, metals, starting first with crude oil and then moving into gold. So crude oil, we looked at yesterday, this little 15-minute area of demand. Now, this did get a little bounce off of this level where we had this base rally. We did get a little bounce off that level without getting a stop out, but not a lot of price action movement. So you're probably moving your stop after about 6 candles. And then the next time it came down through. Now, I will say that this was the better entry, obviously, hindsight being 2020, and then the dang thing didn't quite make it in, which is frustrating because that was really the best trade set up for the day. Well, now, because we didn't quite make it in, I've got to remove it. It's got to go away. And we are still, this downward trend is still existing through here, but we are still inside of this very large triangle, this very large wedge. And so this could break at really any time, one way or the other. And in between there, looking for quality zones, you've got a decent area of demand up here that's not yet been retested, and we typically anticipate that those zones will get retraced. And then you've got a good breakdown below here. So do I have anything that occurred in the overnight? Well, we do have a little bit of a rally up, and it's easier to see on a 15-minute right there that we could see a bit of a reversal. So right at 102 by 101.72, I think you've got a 15-minute reversal level. Next was gold. Yesterday we looked at gold really from a two-pronged attack. From a very small time frame, 15-minute chart, you did have a little potential reversal right in here. We did hit that level and then bounce up, and now we're just chopping sideways, telling you, okay, the level's probably not going to work, because then it wound up stopping out and then rallying back up anyway. And then the other trade that we looked at yesterday in gold was an iron condor. And the iron condor was trading options on futures. And if you don't know how to trade options on futures, it might be something worth learning. And we looked at an iron condor that was between 1970 and 1890 that was netting about a 20% return. So it was a pretty good setup on an iron condor that expires in 2 days. So keep an eye on that one. You may still actually be able to get a little credit for it even after yesterday's price action. Um, One currency that I want to point out, we've spoken about this recently, and we took a look at it the other night, is the Japanese yen. And in the Japanese yen, we had talked about a potential breakdown. We did get a decent breakdown. Now, this one we didn't quite get basing right in front of the zone, but we did get it fairly close with narrow range candles right up in here, and we did break down. So if you took that short, I think now's a good time to take some money off the table, move your stop to break even. Um, but I think we could be setting up for another breakdown right here. And really, the Japanese yen, in the strong bearish environment that it's in, is setting up for breakdowns for the most part. That's probably the better setups and the better trades. Um, Another one that we looked at recently, we look at the euro and taking a quick gander here at the euro, dropping pretty hard. Confirmation long, cut through without really an entry, and then we came to the second long right here, which I think could have been a decent setup, but it just kind of stalled, actually setting up for a breakdown, which is what happened yesterday. We broke down below there. Now we have hit this third area of demand, giving us an entry. But if you took that long, you're 1, 2, 3, 4, 5 candles in at this point. I would move your stop to break even or just get the heck out of Dodge, as it looks like we're going to continue to flounder in the euro with a nice supply level right here at 1.1. All right, everybody. Well, that's all I have for today. If you have any questions, as always, send us an email, support@tradersarmy.com. Until tomorrow, I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.